What have the charts been telling you? And I assume you agree with the hypothesis that that Steve basically hinted at there, and that is that a slower pace of rate hikes or no rate hike is good news for tech shares.
Certainly. And I think a lot of that really goes into the macro headwinds that we're facing that we have to be cognizant of as well, which is that AI hype, which we can certainly get to, which is fueling that tech rally. But what I'm paying attention to is how the market has reacted throughout various bear markets. So history has told us that the declining or lagging sector tends to lead the decline, but also leads the rally. And that's also seen true throughout bear market rallies. And that, of course, for this bear market rally has been tech. If you look at a weekly chart of the S&P 500 or utilize the NASDAQ 100 as a proxy for the tech sector, you'll notice that the tech sector actually peaked back on November 22nd, which was well before the peak of the broader S&P 500 in January. And then the same holds true with the trough. What I've noticed is we've paid a lot of attention to the 200 weekly moving average. That is an extremely important support zone. That was breached by the NASDAQ 100 prior to the S&P 500. So peak to trough, the NASDAQ is serving the NASDAQ 100 as a leading indicator anyways for that bullish momentum. And that's something I'm really paying attention to.
So that NASDAQ 100 troughed before the S&P 500 troughed back in October, right?
That is correct, yes.
And
it
that
troughed in September.
And that suggests what to you?
That suggests that it's leading because and that certainly makes sense. We're feeling the lag effects of the restrictive Fed policy, and that takes a while to go through some of the economic data, but it certainly has an acute impact on tech first. And think about what we saw initially, lack of IPOs, then that trickled down into pressure on profit margins because it requires cash to innovate. That was an accelerated, increasingly hard to borrow rate, some of the fastest in history. So the companies had to protect their profit margins. We saw layoffs that will help with that. And now we've got the collapse of Silicon Valley Bank, which is arguing perhaps a pause or a slower rate hike may be necessary. We'll see what happens. I think a lot hangs on that. But the market is reacting from the tech perspective to a less restrictive policy, and that certainly makes sense.
So you want the NASDAQ above the 200-day and the S&P above the 200-day to avoid risking new lows, Jessica?
Absolutely. And that's a wonderful question, Kelly. And that's what we define as a secular bull market. If you were to pull a really larger chart of the market on a weekly level, you'll notice that the 200, the S&P 500 or any security going above that 200 weekly moving average is extremely important. Otherwise, when we risk falling below that, that tends to what leads to the strong capitulation moments. But we would definitely see a new low.
Are you what does your spidey sense tell you about where the market and technology shares may go next? Does it all depend on what happens, or much depend on what happens next Wednesday with the Fed?
I think it's all related, and we put the puzzle together. So Fed Chair Powell says labor market imbalance all too often. And the Fed has a playbook for liquidity issues, and their tools are definitely going to tackle demand, but not supply side constraints. And so with the labor market imbalance, too many job openings, not enough people, the Fed can't print people. But what can help drive balance? Efficiencies, productivity gains. Right. And what does that better than artificial intelligence? So that's where, yes, I see the risks, and it is absolutely overhyped, and to be careful in timing the markets and that nature. But this growth play does actually solve a larger macro headwind that contributes to the larger and broader inflationary problems. So my spidey sense says Powell has to do what the market is saying right now, which is 25 basis points. That concerns me. I do think perhaps we should have a pause and wait for the data to come in, because higher interest rates, higher risk of a bank run. But more importantly, what is he going to say? We were in a Fed blackout period. We don't know how he's interpreted all this economic data activity, and the market really hangs on understanding his view.
It is going to be a fascinating week, and that press conference is going to be one of the not to miss moments. Jessica Inskip, thank you very much.